Good morning. We want to start today's session off on the right foot, so if you will bow with me, please. Almighty God, we thank you for this day. We thank you for every day you allow us to live, whether that day has sunshine or rain, because you know how much of each one we need. For that we say thank you. We thank you for things being well with us. We thank you for the opportunity to gather together, to break bread together, and to learn from each other. And when victories come, we will always be glad to give you all the credit, all the praise, and all the glory. We thank you for blessing the food we're about to receive. Bless the hands that prepared it, and bless us to thy service. In thy name we pray. Amen.
Good afternoon. Good afternoon. Good afternoon. Well, I am delighted to be here this afternoon, and I greet you as mayor of the city of Albany, representing the Board of Commissioners, the city staff, and all of the 77,500 residents who call Albany, Georgia home. I want to give a special thanks to the Albany-Doherty Chamber of Commerce, the Albany-Doherty Economic Development Commission, and to Albany State University for hosting us this day for this event. I want to give a special thanks and welcome to Dr. Bostic and his staff. We welcome you all to Albany, Georgia, and we want you to know that you're welcome anytime. So please come back and visit us. As I was saying, this is my third time this year having an opportunity to collaborate and listen to staff from the Federal Reserve Bank of Atlanta. And certainly it is an opportunity that I welcome and appreciate. I believe that it is discussions like these that give us hope for Albany, Georgia. Just to know that you all are listening to us, that Albany and Doherty County in the Southwest Georgia region is being included as you have the discussions about the future and of economics and the changing economic times. We want to be represented in these discussions and when these discussions occur so that we can have input about the needs for our community. So I am glad to be here today and to welcome you all. We are delighted to be able to learn something about the role of the Federal Reserve of Atlanta and how it fits into the plans here in Albany and Southwest Georgia. And we do hope that this will not be the last discussion and it will not be your last time visiting with us. Thank you and welcome.
Good afternoon. Good afternoon. My name is Chris Cohilas, Chairman of the Doherty County Board of Commissioners. On behalf of the Commission and Doherty County, I welcome you all here today. I want to give special thanks to Albany State University, my good friend Dr. Frederick, Albany Doherty Economic Development Commission, President Justin Strickland, Albany Chamber, President Barbara Rivera Holmes, and Dr. Bostic from the Federal Reserve. Welcome to Doherty County. Today is a very exciting day for me, and I want to echo the words of the mayor, my good friend. Today represents something that's very important to this community. It represents us having a meaningful discussion with folks and persons and entities that are larger than us and that deal with issues that affect the rest of the country, the rest of the surrounding communities. And I think a lot of times here in Albany and Doherty County and other small towns, sometimes we think that all of our problems are solely unique to us, and we don't realize that we're actually part of a much larger picture. And today we're having a great opportunity to be a part of a conversation that's going on across the country, and certainly within the sixth state district that Dr. Bostic represents. And I'm very thankful To you, Dr. Bostic, to your staff who you've made available, to the mayor and myself, to the Chamber of Commerce, to the Economic Development Commission, to listen to not only our challenges, but also our opportunities. And we recognize completely that y'all play a large part in the big picture of what trickles down to us, and we're very thankful for the time and the effort that you've invested in our community in getting to know us. I think that you will find that one of Albany and Dougherty County's greatest assets are our people. They have great hospitality that you're not going to find anywhere else, and we certainly hope that you will stay with us as long as you would like and understand that you are always welcome to return. Thank you.
Good afternoon. I'm always glad when the mayor and Chairman Cohelis start because they get you cheered up on the good afternoon, so I have to do it. It's my pleasure to welcome you to Albany State University this afternoon. Albany State, the only four-year institution in the Albany region, welcomes you today. And we have over $289 million impact on the Albany and the Albany surrounding areas. So we are a very important part of the community, and we want to welcome you all. Today, I get the pleasure to welcome Dr. Bostic, Raphael Bostic, President and CEO of the Federal Reserve Bank of Atlanta, and Ms. Barbara Rivera Holmes, President and CEO of the Albany Area Chamber of Commerce, and also a member of the Board of Regents of the University System of Georgia. Dr. Bostic's visit today was very important to ASU and to our community, especially important to ASU. Among his many planned activities to explore Albany today, he also visited with our students and students from ASU, as well as students from local high schools. Monroe, Westover High School, and a couple of other high schools were in attendance this morning. And I believe this speaks volumes to the importance he places on education as a critical component to economic development and success for our area and beyond. Before serving as the 15th president of the Federal Reserve Bank of Atlanta, Dr. Bostic was a professor of public policy at the University of Southern California in Los Angeles. He brings a wealth of experience from an outstanding career in academia, government, and research. He earned his PhD in economics from Stanford University and his undergraduate from Harvard University. He didn't go to ASU, but we won't hold that against him. Dr. Bostic has a passion for understanding the housing sector and how credit markets, financing, and public policy work together to help people achieve the American dream. He served as Assistant Secretary for Policy Development and Research at the Department of Housing and Urban Development. He also spent several years as an economist at the Board of Governors. Since joining the Atlanta Reserve, I'm sorry, y'all, every time I say Atlanta, I'm afraid I'm meaning to say Albany, so I'm still getting through that. That's just me. But since joining the Atlanta Federal Reserve as president and CEO, Dr. Bostic has spent much of his time on public outreach, sharing his deep knowledge of business and financial conditions. He is also a voting member of the Federal Open Market Committee, and that's the Federal Reserve's policymaking group. So they're looking at the money and also interest rates. So welcome, Dr. Bostic. I'm also honored to introduce Barbara Rivera Holmes. And before I introduce her, I want you all to know that her birthday was last week. I would ask you to sing happy birthday, but I won't do that to you. But happy birthday. Ms. Holmes is president and CEO of the Atlanta Area Chamber of Commerce, which advocates for business success through leadership and economic development and creates conditions for economic growth and opportunities. Mrs. Holmes is passionate about the Albany community and about affecting positive change, something reflected in both her professional and personal pursuits. I've had the opportunity over the last year to work very closely with Barbara Holmes, also known as Regent Holmes. And as many of you know, she was actually appointed by the governor to a 7-year term as a member of the Board of Regents of the University System of Georgia. Although she oversees all of the public universities and colleges in the state of Georgia, she has assured me that ASU is her favorite, and I am her favorite president. Thank you. Prior to assuming her role at the Chamber, she served as Vice President of the Albany Dougherty Economic Development Commission, where she oversaw the development of the agency's brand and marketing efforts, which include the award-winning We Are Albany and Made in Albany videos.
She was also responsible for the campaign, There's Only One Albany. Mrs. Holmes also managed the Commission's Business Retention and Expansion Program, which facilitated existing industry, job creation, and capital investment in Albany-Daugherty County. An innovative and charismatic leader, she organized the Albany-Daugherty Industry Roundtable, a CEO-level forum of the area's largest employers. She is an alumna of Florida Southern College, where she received degrees in journalism and Spanish. Please join me in welcoming Ms. Barbara Rivera Holmes.
I'm very excited to have you here with us today in Albany. We've had the opportunity to spend the morning with you and met with your team members a few months back. So this is not the first occasion during which we're really hosting the Atlanta Fed, but I do want to thank all of our partners as well for being with us for this very important discussion. We're going to get started with the most difficult question of the day. What does the Atlanta Fed do? I recognize there's a lot of bankers in the room, but there's other people too. So tell us what the Atlanta Fed does.
Well, that's an important question.
It is important.
Well, first of all, I want to say good afternoon, everyone. It's really good to be here. As President Frederick was saying, I do travel around a lot, and in part, it's to get to know the people on the ground, to understand sort of how everyone is living the economy, to understand their hopes, their dreams, and the challenges that they're facing. So these days and these visits are really a lot of fun for me, and I learn a lot. I never thought that when I get to this stage of life, I could be learning so much on a day-to-day basis. It's incredibly rich. So thank you all for being here, and I'm really enjoying the visit so far. All that said, when I go around, one thing that has struck me is that nobody actually knows what the Fed does. So I'm very happy that you asked that question. We're the central bank, and we do monetary policy. I think most people here probably have a sense that plays out. We do a number of other things. So we're a bank regulator. So we oversee all state chartered banks that are members of the Federal Reserve System, as well as all bank holding companies. So we have an opportunity to look in and understand how the most important banking institutions in the country are operating. And we have a responsibility to make sure that they operate in a safe and sound way. Now, we could have done better. And as we went through the housing crisis and the Great Recession, this district's banking system struggled considerably. We had more foreclosures than any other district in the Federal Reserve System. We had more bank failures than any other district. And so we've revamped our bank regulatory approach to be much more interpersonal and to be much more clear that we're going to have hard conversations earlier rather than later, because we don't want to have that happen again. We also have an important role in the payment system. So do you guys still have cash? So when I have to ask that question now, because when I'm with the young people, they don't really know what cash is. They just wave the phone around and payments start happening. So cash is a Federal Reserve note. So any cash that goes into circulation first goes through a Federal Reserve institution. And so we manage the flow of cash into the economy, and we check dollars to make sure that they are of sufficient quality. So I don't know if there's I think there's some shredded cash in the back. When the dollar bill is not of sufficient quality, we shred it, and then we give it to you guys to play with. So there's that. But then we also manage, and we're deeply involved in other kinds of payments. So if you've ever had to wire money, there's something called FedWire. That's our wholesale payments office that's run out of New York. If you've ever bought something at Walmart or Target or the like, when those transactions happen, that's actually you saying, I authorize the bank of Target to take money out of my account. Right? If those banks are not the same, there needs to be some kind of settlement that happens periodically. We manage that settlement. We have a backbone that does a lot of that. That's our retail payments office. That runs out of Atlanta. And so, although people don't know it, the Fed touches people's lives every day. And we provide value every day. And I think it's important for us to be giving that message much more than we have. so that there's an appreciation for the importance of the institution. We also do community and economic development. So this function, this initiative that we do, grew out of the Community Reinvestment Act. So in 1979, there was an act that said that banks need to make sure that they reinvest some of their deposits in the communities from which they've taken those deposits. And as part of that, they wanted an institution or the banking regulators to check on banks to make sure they're doing that. I actually think that community and economic development is much broader than just the CRA. And that if done well, it feeds into one of our primary mandates at the Fed, which is to maximize employment in a sustainable way. Because when community economic development is done well, the people that live in those communities are more employable, they're more innovative, they're more creative, we get more jobs, and we wind up with a much more robust and much richer economy. And so I think the community economic development function that we have is extremely important. And the last thing I do is I get to talk to people. So we have a platform to talk about how the economy works, to make sure that people understand important facts and details about personal finance and how that plays out, so that people are as equipped as possible to make plans for the future, whether it be for investment, whether it be for vacations, whether it be for retirement. And so businesses can do the same as well. So the communications function that we have is really very important.
Speaking of things that are important, and this has come back up recently, it's the bank's independence from political pressure. Give us some thoughts on why it's important to be a little bit more independent.
So, how would I say this? So over the course of the Federal Reserve's history, we have been charged with really a long-term view, to think about policy not in the moment and its impacts in the moment, but rather to make sure that over the longer term, the economic environment stays relatively predictable and stable. The way that that's been possible is because we have been insulated to some extent from the day-to-day politics. We're structured to be that way. So all the governors in DC, when they are appointed, they have a 14-year term. Right? That's a very long time, but it gives them the license, the freedom to actually think over the longer term. They don't have to worry about what's happening next month or 6 months from now, because they've got a different charge. The bank presidents that weigh in, we actually are not subject to the political cycle either. And that's really given our institution an ability to not get caught up in a lot of the short-run stuff, which, as you guys know, if you go too short-run, you never do the plans. You never make the long-term investments, and then you're always kind of scrambling. So we don't want to be in that situation. I think the independence has served us well. Under Chair Powell, he's told us that we're going to stay independent, and we're going to do that. So what I've told my team is just keep your head down. Let the politics happen as it's going to happen. Our job is to be data dependent, driven by analysis of data, and really from input from local business. So one of the things that we do, which I think has been innovative, and this actually started before I got here, is that we have staff around the 6th District. And the 6th District is 6 states, ranging from Tennessee to Florida and all the way over to Louisiana. And we have staff, their job is just to drive around and talk to people. Find out what's happening, talk to businesses, talk to community groups, and really hear from them. Are they growing fast? Are they having problems hiring workers? Is the regulatory environment too difficult and is preventing things? We're excited, we're going to make some new investments. All that kind of information. And the reason we do that is because it's my view that a lot of trends happen, and they're well along the way, before they show up in aggregate data. So if we just wait for the data, we're going to be late. And I don't want us to be late. And I'm really grateful that we have this structure, because it allows us to hear things in real time and incorporate that into our analysis to supplement the data. And that's been very good. But all of this, we're just going to keep doing what we do.
Do what you just do you.
Exactly
There you
right.
Well, good. Well, speaking about being on the ground, learning about how the policies really affect business, we had, again, the opportunity to spend the morning with you visiting some of our local businesses in the downtown area, which, of course, is experiencing an amazing redevelopment. And then this afternoon, we'll host a small business roundtable to continue those discussions. You've gotten a sense of Albany already from your briefing prior and the time that you've spent here, and it's a great community. We've seen significant advancements in education here the last 5 years. We've seen downtown development finally really take off. We've seen new industry expansions, existing industry expansions. A lot of things are working in Albany's favor. It's almost Albany's renaissance. But we're still a community and really a region with many challenges. We have higher poverty rates. We still have slower employment growth. We still lack educational attainment where we would want it. Is this something that you are seeing across the nation in communities of this size? I mean, sometimes in Albany, I think we can all attest to the fact we think we're unique in some of these challenges, and I don't believe that to be the case. But give me your perspective from your travels.
Yeah, I don't think you guys are unique at all in terms of the environment that you face, right? So the economy is evolving in ways that give advantages to big places. It gets to draw capital, it draws media attention, it draws all the things that are going to allow for a relatively easily sustained continuation of growth and development. And the challenge that if you're not one of those big places, if you're not Atlanta, if you're not Nashville, is how do you get noticed? Like, what are the things that you need to do so that big employers know that they should be thinking about your area? So that young people see that there are interesting, fun things to do in those areas. Right? That's a challenge that's uniform. So I've asked my staff in setting up my travel plans to make sure I'm not just going to even the Birminghams and the Tampas and the New Orleans, but I'm trying to get to a wide range of places so that I understand the full experiences that are happening in my district, because we represent the whole district. So I don't think that the challenges and the concerns are that unique, but the uniqueness comes in the mix of people, the mix of institutions, the degree to which there's collaboration and willingness to cooperate, and also the degree, we talked about this a little bit earlier, to have hard conversations, right? To face some of the realities that have prevented perhaps a more rapid takeoff. Because if that stuff stays in the background, it's going to come up at some point. And it will probably come up in a less pleasant way if it comes up by accident than if it comes up in a purposeful, structured conversation.
One of the things that many communities are facing is the workforce development challenge. And that in some regard is due to a misalignment between the output of education and the input needed by business. And I know in this community we have worked very diligently to narrow that gap as much as possible. Strides certainly still need to be made. But we also face an aging labor force. How is this aging labor force affecting the marketplace in general?
So I wanted to answer this. You asked like 4 questions in there?
Maybe.
Right. So
it gives you options, doesn't it?
Yeah, too many options. Sometimes too much choice is not a good thing, right? So let me talk about the mismatch first, the labor force mismatch. So you talked about one, which is important, that it's a question of, do the programs, the training programs of today, prepare people for the jobs of tomorrow, right? And in many regards, the answer is no. But there's another mismatch that is comparable. So as disruption happens, as new technologies emerge, and as the jobs that people have today we don't need as many people to do those things, the skills to do those jobs don't match the skills of the new jobs either, right? So we actually have 2 mismatches. We have one at the personal level, like, do the skills I have prepare me to get a job tomorrow? But then also, I usually use the word the pathway level. Do the programs that give people pathways to get skills, are they positioned to get to the jobs of tomorrow? And I think we have challenges in both of those areas. So our bank has taken this up as one of its flagship issues. We just started a new Center for Workforce and Economic Opportunity, where a lot of what we talk about is, well, what are the skills of tomorrow, so that people know what skills are going to be needed in the years to come. And then, what are the pathways to get those skills? Like, if you wanted to go there and do that, do those pathways exist? And so we got lots of material on the web. I think we got some handouts in the back that start to speak to some of these issues. It's a great infographic. I should probably just have one of these pinned to my back because I talk about it all the time, but it really identifies like what are the job sectors where there's been growth? Like where can, and we do it at a state level and shows the level of income and a whole host of things to give people an idea that there is opportunity out there. You know, one thing that I've been most concerned about as I go around is that when I talk to people, people are nervous. They're worried and they're afraid. And in part, it's because when they hear people talk about the economy, what they hear is there's disruption, there's going to be loss, there's going to be all this change. And then the conversation stops right there. And every person is left to think about, well, how do I fit in that change? What can I do about that change? And we need to make sure that we have the rest of the conversation to say, yeah, there's change. There's always been change in the United States. There's always been change in our economy. So in the 1800s, most US workers were farmers. Right? That is not true today. You know, we're doing fine with, we got lots of food, we get no problems eating, and people have jobs. Right? And so we can be okay with change, but we have to talk people through it, and we have to give people a context and the tools so that they can make the decisions to have them be best connected. All right, so that was the first part of your question. Now tell me the second part again.
Aging labor force.
Oh, the aging labor. So I live with this every day, right? So our bank, we have an aging labor force. People have been in place for a long time. I think our average tenure is 25 years, right? So when you think about that context, we worry about this a lot, and we worry about it in two ways. One, succession planning, right? As our workforce retires out, do we have enough people and the right people in place to allow us to fulfill our mission? And so we do a lot of work on that. We spend a lot of time thinking about that. A second issue then, though, is just numbers. Right? Where are we going to get these people from? And in Atlanta, we're fortunate in that that's a sort of an in-migration place. In places that don't have that luxury, you got to think hard about sort of where you're going to get people from. And you know, this is where immigration policy becomes very important. This is where incentive programs for workers becomes important. You know, all those sorts of tools that say you should think about Albany first, or before you would have otherwise, in locating, in hiring, all those sorts of things, they become really important. And as our demographics shift, and you know, as a country we're getting a lot older, these issues are going to just become more acute. So to the extent we can be purposeful about embracing that and acknowledging it, I think we can find good solutions.
Well, and you talked about in-migration, and I'm going to just jump a little bit to millennials. And we talk a lot about millennials and communities as sort of this answer to the workforce shortage. If we could just draw the millennials, then we will be okay. We'll have the people, we'll have the talent. Is that accurate? And what can communities do to even attract millennials if they're sort of the out-migration communities?
So millennials are important. So I'm not going to use the word millennials. I'd say young people are important, right? Because I'm getting so far away, I don't think the millennials, are millennials still the youngest of the generation in the workforce? I think, yeah, so time is passing, I'm still.
So I've aged myself, is this what you're saying? I did just have a birthday.
This is not about you, this is not about you, I'll just own for me, right? So, but I think for young people in general, they want to work hard. They want to live in some place that they think is going to be interesting and fun, right? I remember when I was a young person, there was value in a place projecting things that I thought, oh, I'd like to do that. Oh, that would be interesting. Oh, this would be fun. And have that, but also have opportunities where you could see an arc to work, a pathway to a career. And it may not be forever, but if you start that way and have those components, then you're in the game. Then it's about the details of, are the companies that are hiring the things that I care about or the passions I have? You can't really control that part. But what you want to do is be in the game. You want to have enough components so that as people start clicking off, well, this is a place I might think about, you stay on the board. And I think that's the challenge. And some of the investments that are happening here that we saw this morning, very interesting in that regard, to say this is actually a place, we're making a place that you can have fun with and fun in on a regular basis.
Well, and I know that, you mentioned when you were younger you would think about places you wanted to live, but I think there was a period there, and correct me if I'm wrong, where it was more, where do I want to work? And I will travel there to get a job. But now we find that it's really about place.
So I don't know about that. I think there is not so sequential a decision, right? So you're going to have to work, right? But then the criteria of where is going to embed that how you're going to live as you're working, right? So I don't know that you can separate it so easily. But if you don't have the fun, right, then the most interesting people, the most ambitious people, they're going to have other options, right? So you want to make sure that you present something that allows those most dynamic folks to not think that it will not be time well spent for them to be in your city or in your neighborhood.
Let's shift a little bit. Let's talk about infrastructure. So we're seeing infrastructure investments. Infrastructure is a big buzzword, right? It's certainly an investment. It's also a buzzword. What sort of infrastructure investments should rural communities be making to prioritize their competitiveness? And we've talked a little bit about competitiveness already.
Yeah, I think, and I didn't think this a year ago, I think the biggest infrastructure investment is high-speed Wi-Fi or internet high speed. I've talked to more businesses who say that's their constraint to growth. I've talked to more cities in the last 6 months who say, we were attracting a business here, and then they found out they couldn't do the things they wanted to do because the technology infrastructure wasn't strong enough. And that was interesting to me. I mean, it's just part of the evolution of our economy, right? We've become even more information-based, and so the ability to transmit and process large amounts of information in real time has become even more important than I think I had appreciated. So I'd say that's the first biggest thing to do. A second thing that has struck me is affordable housing. Now, I've been surprised. I came from Los Angeles. Los Angeles is expensive, right? None of the places I visit now are expensive the way LA is expensive. So I thought there'd be no affordable housing issue whatsoever. I was totally wrong. Every city I go to has an affordable housing problem. And I looked at the data in Albany. We got like almost 2/3 of the population here spending more than 30% of their income on housing. Right, so that's an affordable housing issue here as well. So thinking about how we house our people is going to have to be another part of the conversation that's very important. Because if people don't feel like if they're going to be house poor, and so even if you got a lot of fun things that you can't afford to do any of them, right, that defeats itself. And so the housing piece is something that has also struck me, and I was not really expecting that either. So those would be the two biggest ones. Aside from that, you need to make sure that people can get to where they want to go. So to the extent there are transportation constraints, that is an issue as well. And I don't know this area well enough to know whether that's an issue, but that's something that thought needs to be given to.
Thank you. You want to talk about tariffs now?
Oh, tariffs. Okay.
Okay. Tariffs have been in the news, and so many of those do affect farm products. How do you see the effects of trade tensions playing out in areas like South Georgia?
The same way they play out everywhere else, which makes it hard. It makes it harder. So let's think about what a tariff is. Tariff is just putting an extra level of cost on top of a transaction, right? And for a producer, if the producer has to cover that cost has got to come out of something. Right? It's either going to come out of their profits if they decide to eat it, or it's going to go to the customer and you're going to pay for it. Those are the two options you have. To date, what's happened is that as the trade relationships have gone into more flux, a lot of businesses worked in advance to hoard up on all the inputs that they could at the lower price so that they could try to ride out as much of the turmoil as possible. And so we've not seen very much of a hit to profits or to price for many of the businesses that I talk to. But what they're telling me is that inventory is dwindling fast. And we're now getting to a point where they're not going to have a choice. They're either going to have to pass that cost on, or they're going to have to accept lower profits. The leaders that I talk to suggest that they're going to pass the price on to the extent they can. And so we're going to keep an eye out at our institution to what extent we do start to see inflation start to pick up in a more robust way. I will tell you that in certain sectors, that is already happening. Those have tended to be in the sectors where the tariffs went into place the earliest, right? So those were the ones that faced that dynamic the soonest. And so now they're through their inventory and now they're passing those prices on. If you think about appliances and a number of the folks that use steel and iron, aluminum, those are sectors where we're seeing a lot of price movement. Now, what does it mean? It means that businesses have to think hard. And let me step back. So that's tariffs. I think there's another piece to this tariff discussion, which is very important, which is the tariffs keep changing. Right? We don't have a set of rules, and we don't know what the rules are likely to be at the end. Right? So there's always a likelihood that the tariffs could come off, that they may be reduced. You may add some more here or there. What that's done is created a tremendous amount of uncertainty about what the rules of the game are. And in an environment where there's a lot of uncertainty, it becomes difficult to do long-range planning because you don't know what the rules are going to be 12 months from now. So you can't tell whether a particular investment is going to be profitable and it's going to make sense. And so what we've heard from a lot of our business contacts is that they are now stepping back and taking a pause on major investments in their businesses. Right? And this has implications for how productive they can be in the future, how many people they're going to hire in the future. And so the uncertainty has I think, slowed down some of the positive change that we expected to see from the tax reform, where businesses now had a lot of extra cash available. That cash we were hoping was going to get deployed for capital investments and increased productivity to change the trajectory of the economy. But right now, the message we're hearing from our business leaders is that we're going to wait and see how this all shakes out. And then once it shakes out, then we'll figure out what kind of investments make the most sense. I think that's a second piece to this, which is all about the flow to the new endpoint. Right? We're in the middle of a process, and that process has got some uncertainty in it. That uncertainty has consequences. Now, I'm not commenting on the wisdom of this approach. Right? So if you talk to the administration, what they would tell you, I think, is that they are doing these things to drive a negotiation to get to a better outcome down the road. We'll have to see if that happens. And that's, I'm not in any of those negotiations. I don't really have a sense of how that's going. But that's the deal that we're pursuing. That's the approach we're pursuing. And that's what we really will need to pay attention to.
Now we have time, I think, for one more question. Is that correct? So the Fed has a goal of 2% inflation. And it's been mostly unclear under that level in recent years. What are the reasons for that becoming a little clearer?
Well, I don't know if it's become a lot clearer. We've had 2% as our target for inflation. We were at 2%, I think, in the middle of 2012, and then we didn't hit that again until last month. So we had 5 or 6 years where we were under our inflation target. And I think if you read the minutes of the Federal Reserve meetings, I'm guessing nobody here actually does that, you would see that we expected there to be movement toward 2% for like 4 or 5 years, and it just didn't happen. And part of the question is sort of why. There are lots of theories out there, and I've asked academics to start to do research to try to disentangle these. So one is that businesses were scarred, so they're not going to aggressively work to take on labor because they don't want to let them go. Second, consumers were scarred. Workers were scarred. They were just happy they had a job, so they're not going to make too much of a stink about things and they're just going to let it go. Third is that there's market power. So we now have the rise of Amazon and all these large companies who can basically, if you have power, then you get to dictate what the wages are, right? And workers don't have alternatives about where to go. And so that could be an answer. So there are lots of different approaches and things that are going on. Right now, what I know is that we're at 2%, right? That makes me happy. So
we should call you next month?
yeah, you can call me next month. We should still be there. We should still be there. And you know, for me, the goal is to try to stay on our targets as long as we possibly can and make sure that our policies are responsive in ways that keep us there. So we've been maximally stimulating for a long time. Over the last year and a half, we've been pulling back to get to a more neutral position in terms of our Fed funds rate. And my goal is to, once we get to neutral, let's stay there and let's see how the economy goes. You know, we didn't know for a long time whether this economy could stand on its own feet. I have some confidence that it can, and so we should let that happen, get back to a normal position so that we're able to respond with full effect the next time there's a need to.
Thank you. And I've enjoyed this discussion, but I think that we probably have audience members who would also want to pick your brain a little bit. So who has a question? Raise your hand.
If you could say who you are.
My name is Aaron Johnson. I'm assistant professor of economics at Albany State University. And my question, you were talking about affordable housing being an issue. And I know we're hoping Amazon will move their headquarters to Atlanta, but I kind of wanted you to talk about some of the implications to housing prices if we see a highly educated workforce coming in town, and do you see that possibly driving up prices in housing, and what are some steps we can do to alleviate that?
So not just highly educated, highly compensated.
Highly compensated.
So you know, housing markets are just like every other market in that to some extent they're an auction. And if a unit's available, the people who are interested in that unit, they're going to go and they're going to bid how much they're willing to pay for it, and the people who are willing to pay the most are going to get it. Right? The more people you have that have lots of resources, the higher the rates are going to go. This is basic economics, right? So there are two challenges. So one, you got to make sure that as population is growing, the supply of housing is growing in a way that matches it, so that you don't have something of a feeding frenzy for every available unit. You know, I was in Los Angeles. We were short like 70, 80,000 units. And so when you have that kind of shortage, every unit becomes so precious that everybody's chasing after it, right? One of the things you can do is try to make sure that that doesn't happen. Atlanta, that's not completely that way, but what is happening in Atlanta is it's becoming that way in certain neighborhoods, right? So where we are, our bank is located in Midtown. Midtown used to be a bunch of strip clubs and things. Now it is, and that's true, right? There are pictures. I'm guessing nobody was here for that, right? But now it is the place to be. There are cranes everywhere. They've torn up all the roads, high rises. I think in the last 4 or 5 years, there's been 15,000 units that have gone in there. Zero affordable. They've all been targeted at the highest levels, right? And so that has now created a challenge in that neighborhood where people are asking, is Midtown a neighborhood for everyone? Or is it a neighborhood only for those that are making the most? This is something that everyone is going to have to face, that we're going to face. Now, affordability is a ratio, right? It's how much you pay for your housing divided by how much you make, right? So another piece to the equation is that, are people making enough money? Do they have the skills that allow them to provide value added to firms so that firms are willing to pay them what they're worth? Because if we can hit the income side, assuming that supply is relatively close to each other, then the impacts of rising wages become less on particular neighborhoods and communities. Right? So you know, a lot of discussion happens in the big urban places around, you know, regulation and to what extent are you preventing housing from being built. But I think the other side of it is, you know, are we equipping our residents with skills that make them competitive for the most attractive jobs and the most appealing jobs, and we should be focusing on that as part of this as well.
One of the unique challenges I think a lot of small communities have is we're told that infrastructure is needed in order to attract people, and that makes sense. And we've seen the build out of the mega cities, the Atlantas, the New Yorks, the New Orleanses. But then you have these sort of outlying MSAs within a state, and Albany is one of those. But one of the unique challenges that we face is that our revenue sources, like many other communities, are drying up. And you have basically two forms of revenue for government to put in infrastructure. You either have property taxes, for which we've also seen state policy has provided a lot of exemptions in order to attract investment. But then on the local level, you also have sales tax. And one of the issues that we've obviously addressed locally and communicated to our state leaders as well, we're glad to see some movement there, but that really is an issue that lies with Congress is the need for federal regulation to address internet sales so that infrastructure sources and funding with local government can be better actualized. And so I was curious about your thoughts, or if the Fed even has a position relative to those issues.
We take no position on those issues. So let me speak more generally that effective economic development at a local level requires effective partnership at all levels of government. When you think about the infrastructure, there are some federal programs around Wi-Fi and the like to try to make sure that more rural places, I think USDA has some resources available for this, that may be available in this context. The state definitely has to be part of the story, right? In many instances, states preempt things through their laws that could work in particular contexts. And it's important that the conversations happen in a clear and transparent way so that all the implications are understood. Without having the state legislators here, I don't know enough to know sort of whether they thought their proposals or their actions were going to benefit in other ways that we're not seeing, but that would be part of the conversation. And the other thing I would say is there's always tomorrow, there's always the next piece of legislation, there's always another conversation to be had as the conditions evolve. So I would encourage continued engagement in that space and try to reach as many people as you can.
What guides you in setting the prime rate? Because we don't want to overset it, we don't want to underset it. Okay, we want to the exogenous interest rate that will induce development at the local level. How do you set the prime rate?
How do we
set? What guides you in setting the prime rate that guides other interest rates?
Yeah, so we don't, historically we have not thought about it like that. Right, so monetary policy is a general policy that's applied to all communities. Right, so on some level you could think of our policy is really designed to create an environment that allows your average firm or your average household to make plans, and that should translate into a particular level of GDP growth, a particular level of employment, and the like. That's how we think about it. I don't think about prime rate in the context of Albany or Atlanta or Midtown or any of those sorts of things. All that said, one thing we do worry about, and let me say this, in terms of thinking about what kind of interest rate is appropriate or whether it's stimulating or contracting, right? There is a basic expectation about what inflation should occur. Right, so that's our 2%. And then there is what you'd call sort of the neutral rate of interest. Right, so what is the basic rate that you would pay if we didn't have any kind of uncertainty in the marketplace and all that kind of stuff? What would the service for providing debt look like? Right? And as you start adding them together, that gets you to a notion of what a neutral rate should look like. And then you can compare the prevailing rate to that rate. Right? So right now, our Fed funds rate is, I think, is 2 or 2.25, something like that. And my analysts and modelers suggest that our neutral is somewhere between 2.25 and 3. Right? So we're getting pretty close to neutral right now. Right? And at that point, we're going to sit back. Now, banking institutions, they decide how much extra they're going to put on top of the rate that we set for savings accounts, for their mortgages, for business loans, all that kind of stuff. And that's kind of gets set all in that context. But we try to think about it like that. Now, one thing I've been thinking about, and I'm trying to encourage more analysis on this, is the question of how well we understand how Fed policy affects families and businesses at different parts of the distribution. Right? So if you start with, and you have, you're at the 80th percentile in terms of income or wealth, or if you're at the 25th percentile in terms of revenues and profits, right, in the business side, is your impact the same as if you're in the middle? Or is it the same as if you're in the 90th percentile? Right? I don't think there's been enough analysis of that to understand what the distributional impacts are, so that we could say, okay, city X or community Y, your families or your businesses have a certain profile. When this policy happens, these are the types of things you can expect. I think we can start to have different kind of conversations in that regard, and I'm trying to have, I have a grad student at USC who's working on this right now, and I hope he gets to be famous for this. That'll be very good. But then the last thing I would say on this, because I know we have to go, is that I want to go back to what I was talking about in terms of maximizing employment and making sure that the people on the ground are as employable as possible. Because the more employable, the better skills, the better resource your residents and your community members are, the more resilient they're going to be to whatever happens. Because they'll have more options, they'll be more talented, their ability to contribute to the economy will be much clearer. And that puts them in a better position, but ultimately that'll put you in a better position as well.
Great, thank you so much. Thank you for being with us. This has been a fascinating conversation, and I appreciate most the interest and the time that you've taken in speaking to our regional business and community leaders, but also in getting to know our area better and really seeing maybe some of the effects of policies that are put in place and how they do affect regional economy. So appreciate everything that you've shared with us today and look forward to the roundtable that will follow.
Well, thank you very much.
It's been an honor for our community to host President Bostic today and his team. So let's give them a round of applause. Thank you. I want to thank each one of you for being here. Hope you enjoyed lunch. Thanks for coming out on a Monday. We've talked about disruption a little bit, so thank you for letting us disrupt your Monday to hear more about the Federal Reserve Bank of Atlanta and the work that they do across their region. Thank you. We look forward to seeing you again soon.